Good afternoon, traders. This is Coach Alex. We're always asked, how much money do you need to trade? You've heard many people say, and we're going to dispel that for you, that if you're not capitalized enough, you'll fail, right? You need a lot of money to make a lot of money. That's sort of true, but it's misleading. Let's start with the beginning. If you had a $10,000 account and lost 50% of your net worth in a month, that's $5,000. If you started with less, you wouldn't have been able to lose $5,000. What about starting with $1,000? That's our recommendation because you want to take away the element of fear. The more money you have in the market when you don't know what you're doing, the more fear is involved. It's leverage, the killer. Let's look at it another way. If you didn't have fear, you'd be able to spend more time concentrating on the ins and outs of the market, the technicals, the fundamentals, the trades, the risk. Let's put it another way. Instead of $5 per point, if the Dow Jones futures were 1 penny a point and you took 100-point loss, would you worry about that? $1? Of course it'd be boring. And that's the point. You wouldn't worry about how much you're going to lose. You'd be worried more about learning how to trade properly, how to put entries in, stop losses, how to put targets. And at the end of the day, you'd be bored, but you'd know a little bit more about the market. Think of it this way. What if you had $1,000 account and now you get it up to 1,200? Once you're up 20%, what does that do? That will show you that you have a little bit of expertise. You're not blowing out the account. You're able to stay in the game and slowly build. After that kind of track record, not the guru's track record, not some advisor, but your own track record, wouldn't you want to add another thousand at that time? After all, you're going to start with $10,000 in the account. We said start with 1,000. You got all this reserve. Now gladly put in another thousand. What if you make 20% on that $2,000? Well, at that point, instead of making $10 a day, maybe now you're making $30 a day. How long does this take? Well, look at the Wharton School of Business. It'll take 2 years, and you're going to have to pay them $200,000. What we're doing requires 1/4 of that time to commit to the market, and you don't have to pay us $200,000. If you're willing to start small, it's easier to add to your track record and then move on and increase the leverage. Not too far in the future, if you're starting that way, if you're really good, you could add $1,000 every week. Plus, your gains are going to be increasing. Think of what'll happen 6 months to a year down the road when you're consistently profitable. And now, instead of making like that $20 a day, maybe now you're up to $200 a day. That's how you incrementally increase your risk that you hardly notice it. If you're making $200 a day, you're not going to think much of adding another $20. Making $220 a day is a lot smaller than when you started with $20 a day and you had to double your money. Let's just think about that for a while. Add that to the thought process that exists when you decide you want to open a trading account. A lot of companies won't tell you this. You know why? They want you to speculate. A lot of these funded accounts, what they want you to do is trade until you lose. Then you pay them another fee and refund the account. Do you really think they're sitting there giving $50,000 to a newbie who doesn't know what he or she is doing and they're going to let you trade their money? If you believe that, I have this very nice bridge in Brooklyn that you can take advantage of, including the toll booths. Now, there's never been toll booths on the Brooklyn Bridge, but if you believe it, why not? Just a quick recap of what we did this morning. This is called the measured move. What we do is instead of predicting turning points in the market, we wait for them to occur. Then we act. So here's a situation where the market was at 41,182. It dropped right before the 9 o'clock reversal time. So between 9 o'clock and the open, the Eastern time, 9:30, the market runs up from this 41,183 back up to 41,318, right? Nice gain. Well, at the end of that period, don't you think some people are going to be taking profits? They do. And that causes a decline or a stop in the run up because now you've got more sellers. Well, what do? As soon as the market runs this kind of swing, we're constantly evaluating and moving this till we find a midpoint. It's amazing how many times a market will finish the first move, the first swing, if you will, and then retrace half of it, which is about the 41,251 level. So look what happened 2 minutes after the market opened. Everybody takes profit, drives down, and then it hooks up again. These are the kind of trades that are amazingly easy to find if you know what you're looking for on the open. Again, if you're interested in following up more on the way we trade, a little bit different point of view, give us a call at 332 999 3110. See you in the room tomorrow.